Welcome back to my morning report. Chart suppose on Tuesday the 10th of May with me, Rich Perry, market analyst at Antic Markets. Let's look at cable. I've seen this sort of 5-day decline on cable starting to sort of settle down a little bit. Nothing too great in terms of support yet, but signs are possibly that it's found a bit of a low for now. 25 ticks up on the day. We've just had the visible trade balance out for the UK coming in at 11.2 billion deficit, so very slightly above the Reuters estimates there, and we've seen a very slight tick higher on sterling on the back of that. In terms of the sort of the daily chart, we're sort of back now, aren't we, to this sort of pivot around 44 figure. Now, I said in the morning report, this is not a completely accurate pivot. It's sort of broadly speaking, because if you sort of see that you get a lot of the intraday moves go through that level, but quite well, very often actually you see it coming back on an intraday basis to around that 44 level. So I think 44 is a key level, because again we saw that yesterday. We saw an intraday move below 44 44 figure, and then to close around 44 figure. So I think this is a level that the market is looking at, and I think near term, I think it's something that we need to just focus on. You've got, interestingly enough, the RSI, which is unwound back to 50 and started to sort of level off a touch. Stochastics are still falling. MACD lines just crossed lower, but again, nothing too sort of drastically bearish on that. But as I said, I think it's interesting around this 44 figure level. Now we've got 43 figure as I said yesterday as the key low. So keeping hold of sort of 44 figure would I think help this chart, and you started to see the momentum indicators just shallowing out. You've got arguably bullish divergence on the RSI, MACD lines as well, but you need to see those MACD lines above neutral. I think you need to see the RSI above 60 to really suggest that the bulls are starting to sort of be a bit more certain in their support, because you've got this sequence of lower highs still intact and lower lows to a certain extent as well. So you need to break above yesterday's reaction high 44.80, and I think that would sort of obviously help sort of pull the outlook much better, because 44.70 again was a bit of a pivot level through late April and then early May. So 44.70, 44.80 is a bit of a resistance band in near term, today at least. And if you can break above that, then you're sort of looking far more positively. Then you can challenge that non-farm payrolls high 45.40. And then 45.70, which is this reaction high that we saw in early May as well. So a few levels for you to work with there, but initially certainly we're seeing the early signs of support, but is it sustainable? We need to, as I said, see the momentum indicators improving on this hourly chart, and hold some sustainable improvement as well. So I wish you good luck in your trading on cable today, and I'll speak to you later. Thank you.